In today's fast-paced, value-added tax landscape, a game-changing evolution is unfolding. Electronic invoicing, or e-invoicing. Persuaded by tax mandates, organizations are putting a stop to paper-based invoices to make way for seamless transactions. This transformation is reshaping organizations, minimizing errors, and expediting the entire invoicing process. In this webinar, we'll delve into e-invoicing's intricacies, focusing on tax departments at the forefront of this transformation. We'll also explore e-invoicing's global processes, country dynamics, and the pivotal role of B2B and B2G transactions. Hello, and welcome to this video webcast titled Introducing E-Invoicing, the Future of Streamlined Business Transactions, brought to you by Vertex and CIO.com. My name's Tom Schmidt, contributing editor with CIO Marketing Services, and I'll be the host of this webcast. Joining me is Gunjan Tripathi, EMEA Director of Solutions Marketing at Vertex. In this role, she helps shape the strategic messaging and course for Vertex's indirect tax offering. Gunjan is an experienced chartered tax advisor specializing in European VAT. She has extensive consulting experience and is an executive MBA scholar at the Warwick Business School. Hello, Gunjan.
Hello, Tom. Thanks for having me.
Gunjan, let's begin at the beginning with e-invoices. Earlier this year, you wrote an article for the International Tax Review in which you asserted that we need to forget everything we know about invoices and start again. Why is that? And why do many businesses remain unclear about what the term e-invoicing means?
Tom, that's a great question from a sense of where all the confusion really streams from. So I would refer to an OECD study, over 2 years old now, but still very relevant, whereby majority of those interviewed weren't quite clear and aligned on the definition of electronic invoicing, so as to speak. And these are policymakers that we speak to. So the fact that our businesses are confused, the fact that taxpayers are confused, it's just natural because the term is not tax specific and accounting specific enough to have an ambiguous meaning. The term is electronic invoicing. And with an interpretation from a technology perspective, it is often confused with digital invoicing, which of course was the first step of walking away from paper invoices into the world where they could be stored digitally by either being scanned as images and stored as PDF documents and various versions of it. So digital invoices particularly still had the look of a paper invoice, not quite the feel because it was no longer on a paper, and yet was very readable to a human eye. And there was a lot of technology deployed, such as automatic reading and recognition softwares to convert that data into usable formats for businesses. However, the next generation of digitization involved electronic invoicing, which did away with this transformation of paper to digital. Electronic invoicing is going to the very root level and saying, I will generate invoice in a pure data structured format so that it is machine readable from one end to the other, which means it is not necessarily very readable for human eye. And then again, for commercial reasons, you would need a readable version of it. So they that tend to coexist with digital invoices or paper invoices. So because of all these parallel existences and a lot of confusing or ambiguous terminology, my suggestion was, let's start from the very beginning and let's define the definitions so that we can then move it forward as a shorthand for deeper conversations.
Gunjan, you maintain that e-invoicing should be considered as a strategic issue for every company. Can you paint the bigger picture of why e-invoicing is the future? And is it more than just tax?
Absolutely. So first and foremost, invoices are commercial documents with a lot of information on them pertinent to taxes. Hence why the tax policy uses the information of an invoice as the crystallizing feature for declaration purposes and reporting purposes. So it's almost as if tax authorities have well understood how the invoice data is being utilized by them downstream, and therefore now they are imposing policies to make amends, edits, and tax accurate information available on these invoices upfront, which is possible in an electronic format. What it does to a business ultimately is, because this is ultimately a commercial document, this supports the collection of revenue, cash for a business. This ultimately clarifies the terms of exchange of goods or services between trading partners and or customers and businesses, which ultimately means there are a lot of interested parties in having it accurate and processed as fast as possible, with taking away any pain and any delays to cash and revenue generation. So dare I say this, while being a tax policy drag or a push and pull effect that tax policies are causing, but ultimately the entire business and its operations and processes, right from the office of the CFO, the CIO, the CTO, have to come together and work as cross-functional teams to make sure that this becomes a value-add process to the businesses rather than a very expensive compliance activity.
Let me follow up on that a little bit. Can you talk about being prepared for e-invoicing and its impact on a company's cash flow? Who really needs to be keeping tabs on this whole process?
So typically, tax and finance or accounting teams are at the forefront of these changes because they are the ones who typically track it and who have the ultimate responsibility to their tax authorities as stakeholders to report and to be compliant. Now, the complexity comes from the fact that every tax authority still ultimately goes ahead and publishes its own set of mandates, its own set of schema, and ways in which it wants this information flow to come to them. This means that ultimately we are looking and slicing and dicing a large taxpayer or a business's data for various stakeholders, and all of them are important, which means from a preparedness angle, in an upstream transaction life cycle, a business really needs to know where are their strengths and weaknesses around data management, around all the data that ultimately tax authorities would need in some shape or form, and whether they have it today, because if not, how are they going to collect it going forward when these mandates go live? So there's a big element of preparedness, and this is why it is helpful when tax authorities talk about roadmaps on which these things will go live, after which the tolerance to not meeting the requirements will continually go down.
Can you discuss approaches to e-invoicing in Europe versus the rest of the world? Where do things stand here?
So I think the pioneers and the early adopters were the Latin American countries for e-invoicing. And Europe, having seen the success of it alongside with some of the IMI APAC region countries, are jumping on this bandwagon, so to speak, because it drives efficiency and accuracy in the tax processes and with the businesses. And it reduces the speed and time for compliance. So it not just improves cash flow for businesses, it also has ability to improve revenue, i.e. tax collection revenue for tax authorities, and hence why they are typically seen to be interested parties in this. And having seen the whooping success of it at the back of LATAM, European countries, especially those who had some of the largest VAT gaps associated when various studies like VAT gaps are done, again, were championing it ahead of others. So Italy was a prime example of adopting it with effect from January 2019 and has shown a significant decrease in its VAT gap collection estimates.
Gunjan, can you share with our audience the highlights of the Vertex e-invoicing offering?
So Vertex have been in the business for over 4 decades, looking after the transaction life cycle for businesses and helping them determine the right rate of taxes and reporting it on the right VAT GST returns. As an extension, given how much this overlaps from a journey of transaction reporting and its end-to-end compliance piece, Vertex has ventured and expanded its compliance offerings to also include e-invoicing, reporting, real-time reporting, and where needed, generation of these electronic invoices that are tax authority level compliant.
How does Vertex e-invoicing help organizations streamline the e-invoicing process and comply with B2B and B2G transactions?
So let's quickly expand for our audience, B2B, B2G, B2C, before we dive deep into it. So business to government, that's B2G. So when a business transacts with a public sector body, that's B2G. B2C, i.e. a business selling or transacting with end consumers, such as you and me in our private capacities. And then ultimately B2B, which is where two businesses are holding transactions with each other. Now, typically, we have seen electronic invoicing really take hold first in the B2G segment and followed by the B2B segment, which means all businesses are typically getting caught out when they are trading with large partners, such as other businesses or governmental bodies. This brings them to the next step, which is these are high stake, high value, high volume transactions that need to be reported and completed accurately. So when our customers turn around to us at Vertex and ask, how can I do this with minimal intervention, with less number of steps, and yet having an end-to-end compliant journey, we offer them a combination of our determination, compliance, and electronic invoicing solutions that we have developed individually and then in an interconnected manner as well, so that our businesses who are taxpayers in one jurisdiction or multiple jurisdictions or have multiple corporate entities can all have a very streamlined process of bringing their data, bringing it once or no more than on one occasion, having therefore a point which is source of truth in addition and supporting their ERPs, taking it through the journey through to the last mile reporting into tax authorities, and then ultimately also being able to archive it for tax audit purposes in future. There are just so many steps when you really break this down that it can be overwhelming, and it can be daunting when you have very different requirements being required to be addressed, because Germany will say something different from France, will say something different from Italy on the details of the policy. So it helps to bring it all together, because otherwise there is a great lot of devil in the detail.
Thank you. Well, that's about all the time we have for today's webcast. I want to give a big thanks to our speaker, Gunjan Tripathi of Vertex, for sharing her insights and expertise with us today. And thanks to you, our viewers, for tuning in. Please be sure to check out the resources section on your player for some valuable Vertex content. For Vertex and CIO.com, I'm Tom Schmidt.